UK. We'll see how that develops throughout the day. Let's bring in an expert on all of this. Bilal Hafeez joins the program, CEO and head research over at Macro Hive. So we've been debating on the program in the last hour or so how so many of these kind of almost threads that we're seeing in the UK are truly global issues when it comes to fiscal headroom, when it comes to the deficit, when it comes to spending cuts, et cetera. You're seeing it in France, you're seeing it in the US. How do you trade it relative to these other countries?
Well, I think you're absolutely right. There's a global story, I think, that's going on, number one. And I think 2025 will be about how all of these cross-currents intersect with each other. The biggest one, I think, is that we are still in a relatively high inflation regime. That inflation hasn't been defeated. So that means all the central banks that started to cut rates last year are going to have to pivot one way or the other. And for the UK, that's a particular problem because the Bank of England has constantly tried to be dovish, even though the inflation picture has been sticky. The other issue is the debt levels and deficit levels that we're seeing across the world. The UK has a problem where it also runs a current account deficit, which means that it relies on foreign inflows. And so it requires more credibility than, say, Europe, which has a surplus, current account surplus. And so the UK then has this challenge of trying to attract the capital inflows to sustain its gilt market. So I think the UK is in a particularly difficult problem. I think it has all the problems of all the macro risks that we have this year. And so as a result, I think this is why we're seeing what we're seeing at the moment in the gilt market.
So steepeners have been kind of the trade du jour for a lot of the bond markets in the last couple of months. I would argue in the last year or so, specifically since the third quarter of 2023. If everyone's putting on that trade, do you still put it on?
I think you do, and you may not even need to put steepeners on. You could just do outright short 10-year yields. I think what's interesting is that even though central banks have been cutting rates and the front end has been, yields have gone down, what we're also seeing is an increase in term premia. So it's not only a revision of expectations of monetary policy, that there'll be less cuts. There's also an increase in term premia back into the curve, which to some extent reflects the fact that we have these debt issues.
Yeah.
And I think that's going to be a more important driver this year.
Does this, what we're seeing unfold at the moment, does it in any way change the narrative that you just put money into the States? That's the safest place to put money right now.
It does in some ways. I think what this does is it tells you that the bond sell-offs that we've been seeing, whether it's in the US, the UK, Europe, everywhere, may well continue. So all the talk about, US 5-year, 10-year yields are attractive to go invest in, that could be a risk.
You see more upside.
There's more upside even in the US,
right.
in the yields, because the Fed may not necessarily cut as much as people think this year. Inflation in the US may actually end up being higher than people think. And so as a result, then term premium comes back into the curve.
Yep.
So even US yields could end up higher.
What I'm really asking is this narrative that's driven markets for the last few years, American exceptionalism, America's economy is doing better, America, therefore, is the place to park your money. It's sucked in huge amounts of foreign flows. Presumably what I'm seeing here in the UK this morning just encourages me to continue to do that.
Absolutely. From a growth perspective, that's certainly true. The US, is seeing higher productivity than other parts of the world. The growth numbers are generally stronger as well. So in that sense, it's true the US is a more robust place to invest. The problem with the US is valuations are stretched.
Yep.
So, PE ratios in US equities are already pricing in that exceptionalism. And so the challenge for the US will be what happens if US yields rise further? Can those valuations remain so high?
Bilal, you've put together your annual list of grey swans for 2025, things that are possible but improbable. I had to chuckle at some of them. We'll leave Man City aside. But you have said that on item 5, Keir Starmer could return to the polls. I wonder, is the most likely reason that happens because the economy has gone down the plug hole?
Absolutely. I mean, this comes off the back of the plunge in popularity of Keir Starmer, and we were trying to think about what circumstances could you have which could lead to a Labour majority somehow collapsing to trigger an election. One would be geopolitics in some way, whether the UK gets embroiled in some Middle East war and that splits the Labour Party, and so that could be something. The other could be a fiscal issue like we're seeing right now, whereby, because of this bond route, maybe tough decisions need to be made around cutting spending on the NHS, and that splits the Labour Party, and then you have this vote of no confidence. And then that somehow sort of triggers an election. So that's the possible scenarios that we could see. Of course, it's not a base case. It's very unusual for a party with such a large majority to collapse in that way for a general election.
Yeah, I mean, it was similarly unimaginable when Boris Johnson got his landslide majority, and look how that ended. The other one on your list is that we get a return to zero interest rates, so bringing it back to the Bank of England. Could the Bank of England genuinely be the only saviour that Reeves can rely on?
I think there's some truth in that, insofar as the Bank of England could be the only saviour for the gilt market, insofar as the one thing they could do is to stop doing QT, and so return to becoming a big buyer of gilts, and so that would just stabilise gilt markets and auctions and so on. The other could be, if they were to cut rates significantly, that would reduce the interest rate costs in the fiscal numbers. So the problem in the UK, you have this death loop now in terms of the fiscal rules, where as gilt yields or base rate yields go up, then the spending buffer, according to the fiscal rule, disappears, and so you have this vicious spiral. So the Bank of England could save the UK in that respect. The question then is whether they now get captured by the fiscal authorities and they lose credibility then.
Does that credibility factor get priced into the market, or is that what this is?
I think at this stage, I think there's some inklings of a credibility issue, but I don't think it's as extreme as we had under Liz Truss, where there was a very precise effect where, Liz Truss got elected, announced a budget, and then gilt yields exploded higher. This time, we're not seeing that. The gilt yield move, while it has been quite large over the last few days, it comes in the context of yields going up quite significantly. So we're at the stage now where there's a risk that credibility comes under fire, and this is the big test now for the next few weeks, whether this becomes a credibility issue, whether it's on the Bank of England side in terms of inflation credibility, or whether it's on the government side in terms of fiscal credibility.
It's January the 9th, OK? We're 9 days into this year, and we're seeing a series of crises emerging around the world. The UK, obviously, the epicentre of the story this morning, but who knows what's going to happen on the 20th when Donald Trump assumes the presidency. How easy is it to predict this year? What kind of volatility should I be expecting? How dangerous is it going to be this year to invest? How difficult is it going to be to invest this year?
I think it's going to be very, very challenging this year. I think for a number of different reasons. One is that inflation hasn't been completely slain, which makes it difficult for central banks to cut rates and bail out markets. Equity valuations are stretched in all the places that you want to invest in. And then government deficits are very large during peacetime. And so all of these factors are coming in just to lead to a more fragile market environment. Then you get all this political volatility in terms of Trump announcements and such that we're going to have over the course of this year. So I think it's going to be a very, very challenging year.
Everybody's
stunned you into silence.
No. I think it's going to be a challenging year. Lack of communication. In terms of how this is likely, what is your base case right now, and how challenged do you think that base case? How quickly do you think any base case is going to be challenged?
It's a good question. Our base case in general are higher yields across the world, and that's sort of occurring right now. The risk for us is that it all happens in January, and we see this move up in yields everywhere in January, and then nothing happens for the rest of the year. But our base case is higher yields across the world. Behind that is the fact that central banks won't be able to cut as much as what's priced, because inflation's more sticky. The other thing we're looking at also is equity valuations do look stretched in the US, so they will start to get challenged by these higher yields. So this year will be the crunch year for equities.
If equities come down, where do you hide? Do you hide in Europe? Do you hide where is the diversifier this year? Where is the uncorrelated asset this year?
I think it's hard to find anything uncorrelated. Everything's correlated in this current environment. Where you do see some value are places like Eurozone, China, maybe Japan to some extent, but they all have their problems. So the real non-consensus trade for this year would be some kind of bullish China growth story. So that would be the thing to perhaps play for, because people just aren't invested in China because they're worried about tariffs, the economy's doing terribly, inflation numbers have been incredibly low.
Yep.
So that would probably be the one area where we could end up with a big surprise.
Well, you can certainly see it in the inflation numbers this morning. China 0.1 on its CPI print. The rest of the world dealing with an inflation narrative that doesn't seem to want to go away. Bilal, great to see you. Thanks for stopping by to see us. Bilal Hafeez, the CEO of Macro Hive. Call 6 looks like